Good morning, traders, and welcome to the morning update on the 1st of June. Today it's been presented by Mark Owen, and I'm one of the senior traders here at Phoenix Blue. We'd like to wish you the very best of luck for your up and coming June. Okay, one thing that I do want to touch on is how were your results through May? Were you consistent in May? What I want to know is drop me an email on mark@phoenixblue or info@phoenixblue, or even if you just want to drop a question in the comments tab at the end of the video. Let me know how your May was. How do you think you could have improved? What areas of your trading do you think you were lacking in? Okay, and maybe we can help you out. Okay, trading is a marathon, it's not a sprint. So what I see is a common area where most traders tend to fail is particularly when they go through a little bit of a rough patch. And what I mean by a rough patch, that could mean a slight drawdown, it could mean 2 months of not making any money. So they feel that they have to swap things up. And that could mean changing strategy, it could mean doing something outside of their rules. And the problem with this is when you start changing elements of your trading month on month or day in day, how often you tend to do this, it's very difficult to judge yourself. And I don't mean judge yourself, I mean analyze your trades. Because if you're changing the variables every time, then there's no consistency. Think about any professional that you see, whether it's Tiger Woods, whether it's Lewis Hamilton, Roger Federer. You don't see these guys changing their swing or changing their approach to a race each week or each month. Yeah, everything that they do is a repetition. And once you create that repetition, all you can do is improve that repetition. Now, the downside to this is if you don't have a mentor or you don't have someone that's holding you accountable, if you're doing something incorrectly and you keep repeating and repeating and repeating, what you become is you become a professional at repeating bad habits, which in this case means that you will lose an account very, very quickly. So I don't want to be the bearer of bad news on the 1st of June, but what I'm saying is make sure that you have some sort of accountability, you trade with people who know what they're doing, and if you don't have a mentor, then just follow our YouTube videos, subscribe to our newsletters on the website, see what we're doing. Okay, we give away plenty of free information that will help you along your way. Okay, so if you do want to meet us, we are actually speaking at the London Forex Expo this Friday here at the Grange Tower Bridge in London. So listen guys, if there's any of you that want to come down, meet some of the team of Phoenix Blue, it'd be a pleasure to meet you. Come down, say hello, register for some of our newsletters, etc. It'll be great. Okay, it should be a good day. There's lots of people speaking, but more importantly, you can put a face to a voice right now. So there will be myself, Nishal Patel, and Tom Colley there at the event. So please come down, make yourself known. If you are a subscriber, please just come and introduce yourself, and we look forward to seeing you. Okay, so news announcements. What's happened? Okay, so overnight we had some better than expected manufacturing PMI from China, only just. What we look for in any sort of PMI or ISM number is a number greater than 50. Whether it's 50 and above, what this shows is slight expansion. Okay, below 50 shows contraction. So what we can do is we can watch PMI numbers, ISM numbers to forecast what the GDP is going to be. So we can use that as like a 3-month leading indicator. This obviously I'm not going to go into this in great detail now, but we can see what happened there for China. We can also see that the Australian GDP quarter on quarter came in at slightly better than anticipated at 1.1%. This was largely due to a 4.4% increase on exports from the prior year. Now you'll probably wonder why have the exports increased so much. Well, if you look at what the Australian dollar's done over the last year, you can see it's devalued. So obviously that will increase the appetite for exports from Australia. Okay, and this is why you find that anyone with a frailing or lagging economy, or somebody that really wants their economy to start thriving, what they try and do is devalue their currency, therefore increasing the appetite for exports, because their produce in their country becomes a lot more affordable. Okay, later on today we've got manufacturing from the UK. It's expected to come in below 50, and then we've got ISM manufacturing from the US expected to come in just over 50. And then we've got the New Zealand GDT price index. This is probably the most sensitive index there is for the New Zealand dollar. So this is tentative. Every couple of weeks this is tentative. There's never a set time of when this is coming out. This is the pricing on dairy produce out of New Zealand. So if the produce GDT price index drops or goes down significantly, that will weigh on the New Zealand dollar. If it increases significantly, that will also rally the New Zealand dollar. So be wary of the GDT price index if you are intraday trading on Kiwi, because you can see substantial volatility in this market once it's released. Again, like I said, there's no set time for this to be released. Okay, so what's happened with the Nikkei? So what we saw was we've seen the Nikkei that pushed out of the symmetrical triangle. We got a close outside, but look what's happened last night. It's gapped down massively, and then it's closed within the symmetrical triangle. So what we'll probably find is there's a bit of risk-off appetite coming in right now. Okay, I'm not actually showing the S&P chart today, but the S&P had a substantial sell-off yesterday, and it had a little bit of clawed some of its losses back towards the end of the day, but then it started to follow suit, probably dragged down by the Nikkei. So we can see that this is probably, if you were a technical trader, you'd probably want to say that looking at this, you've had a gap down, a close above, then a gap up, and a close below. This is signaling now that the market's likely to come down and test the bottom trend line here. So if we're going to see a sell-off here, we'll probably see a rally in the Japanese yen, which coincides with the S&P falling away. So if the S&P falls off, you'll see influx into the Japanese yen. That's the risk-off scenario taking place. So on the flip side of that, guys, anyone that is watching this video, if we see a sell-off in the S&P, we see a sell-off in the Nikkei, we see a rally in the yen, where else should we see a rally? So all listeners out there, I want you to mail in, where else should we see markets rally? So this could give you an opportunity to look for some shorter-term rallies. Where do you think we could see a risk-off rally? Please leave your comments in the box, and we will reply to you throughout the day. The dollar index, well, we can see the dollar index broke out of the channel we were watching. We were looking to see if it was going to retreat back into 95, into this blue box, before making its next move up towards 98, and then looking on towards 100, providing the data is good. Okay, and the data I'm talking about, obviously we've got the ISM numbers coming out later today, but more importantly this week we've got non-farm payroll. Okay, with all the talk about the rate hike coming out of the US, if we get good data on the jobs market, hourly earnings, then we can expect to see a significant rally in the dollar. Okay, and we just literally want to be buying dollar and selling pretty much the rest of the market. Primarily, for me, I'd be looking at the Canadian dollar and things related to oil. So we'll talk about that in a moment. Okay, Aussie dollar. Well, we can see that Aussie and Kiwi, if you look through the majors and minors, are probably the strongest of the markets at the minute. Only in the short term. They're just having a little bit of a pullback. So this is what we anticipated. We did highlight the 73 area to 73.50 to 74 area of where we'd like to see the Aussie dollar come back into. So we're looking for this market to rally into here, and then we'll look for continued shorts to the downside. Okay, dollar CAD. We've literally just added it in again now. So I've got 4 trades running dollar CAD. Initially bought down here at 29.33, then at 29.70 I think it was, and then in at 30.07, and then this morning at 30.75. Each trade we're adding in, building a bigger position. The trades that I've been adding in through here, all very tight stops, but the way we're looking at running this is, as these intraday positions move, we're looking at pulling some of the position out while it gets up to here. So what we can do is we can come in with small risk, and we're building a large position. Once it gets to here, the 32s, we'll be looking to take a substantial amount of money out of the market, because we want to see a break and close above here before we add back in, and our ultimate target is up around 134s. Okay, so next chart we're looking at is WTI. Okay, so WTI obviously is what is very closely correlated with Canadian dollar or the Norwegian kroner. So we've been highlighting now that 50 is a key area for us potentially to sell. The market rallied straight up into the weekly supply zone. We've got our reaction. Now, if we look at this on the 4-hour chart, you can see it's double topped, and we entered in just under 50. It also missed a second entry at 50.1, which was a shame, but never mind. The double tops here. We've got our neckline, and we're watching to see now if this neckline will break. If it does break, then we'll look to add in on the first pullback on the 4-hour chart. So the first pullback, lower high, we'll be looking to add into this market and take it further down. Ultimate targets we've got on here around $42, $43. Okay, so that's it from the charts today. So don't forget, guys, I have asked you a question, and I do want you to reply in. I want you to tell me what market you think might rally based on the S&P falling, Japanese yen strengthening, and dollar strengthening. Where do you think the money flow might go to? It's a risk-off scenario, so where do you think the money would go to? Okay, just put your answers into the comments or email them to me at info@PhoenixBlue or mark@PhoenixBlue, and we'll get back to you. Okay, so the way I've been looking and analyzing the chart this morning is what we call the Phoenix Blue Pure Analysis. This is based on clear price action, no lagging indicators. We buy and sell with institutions. We trade with a fundamental bias. We also look at the commitment of traders for our directional bias as well. Something else we look at is seasonality as well. So on the seasonal bias, we look and try and line it all up, and we look for high probability trades and trade in the direction, and look to build a big position over a period of time by using small risk. Okay, if this is something you'd like to find out more about, please email in and we'll be happy to talk to you. If not, hopefully see you on Friday at the London Forex Expo. Have a great day, guys, and we will see you soon. Bye-bye.